Good afternoon, everybody. Thank you for having me here. When I was preparing what I was going to talk about for today, I thought I was going to be in the slot immediately before lunch. Now, the slot immediately before lunch, you're the only thing standing between people and food. So, that's we heard a reference to a saber-toothed tiger in the last panel, and maybe that's like being in a room full of saber-toothed tigers. Instead, with the new schedule, and thanks to all the interesting comments this morning, we're running a little behind schedule, so I have also the even more challenging position of speaking right after lunch. Now, nice heavy lunch, full buffet. Think, people may be getting sleepy. It's been a long day already. They're ready for their afternoon siesta. And so it's my job as a former regulator to come up and somehow talk about regulation and keep people awake. So I think it maybe part of the wry's sense of humor, a subtle irony of the scheduling. But in any event, I'll do my best, and if anybody dozes off, I won't tell. And then if you really want to know what I have to say, I'm also on the late afternoon panel, so maybe you'll be awake by then. By way of background, I'm a former regulator. I was at the CFTC for several years and was responsible for setting up LabCFTC, which was the first FinTech innovation hub set up by market regulator. I had sort of started my career as a lawyer, like many of the people in this room, then kind of switched over from law to business. Worked on kind of a .com startup, rebuilt Cantor Fitzgerald's market data business as a business executive after 9/11, and worked on some electronic trading initiatives in New York and London. Worked in derivatives clearing. So then I went to the CFTC, after a background in industry on both the legal and business side, and kind of brought that perspective to regulation. I originally went in as an advisor to a previous chairman, Chairman Massad. And CFTC is actually a small agency despite all the responsibilities it has. And I had a range of responsibilities. You have to be a bit of a generalist in the chairman's office. A big focus from the outset was data and technology. This was because the CFTC had well-documented challenges around just making sense of all the swaps data it was getting. And so one of my first responsibilities was to do a bit of a listening tour across the agency and just understand, what data and technology the agency was using for its different missions. And, regulators are actually, like most people's businesses, they're very technology-centric. Technology is an important part of how regulators do their job and monitor markets and fulfill, various missions in terms of risk, market conduct, surveilling fraud and manipulation. I also had responsibility at different times for overseeing our international affairs office that does coordination with other regulators, and then running the division that oversees clearinghouses, which are a very important part of market infrastructure. And so, for example, futures and now swaps generally need to be cleared in our marketplaces. So in 2015, as the agency started to become more aware of both the rise of cryptocurrencies and also the blockchain, we put together, and in fact it was in 2015, the CFTC was one of the first federal government agencies to sort of take a position, if you will, through an enforcement action where it was determined that Bitcoin was a commodity for jurisdictional purposes. Now, the definition of a commodity under the Commodity Exchange Act, as the lawyers in the room here I'm sure know, is extremely broad. And one of our former commissioners says that anything that's a noun can be a commodity. So it's a pretty broad test. Although I said this to a room full of SEC people once, and they said, "Well, what about a security?" It's like, okay, if it's a security, then maybe it's not a commodity. But maybe it can be, as we're hearing in this world of tokens. So we started monitoring those in 2015. We started working with other regulators in the U.S. and around the world to monitor blockchain technology to give a sense of kind of what it was going to mean, in clearing and settlement. What was the impact of these virtual currencies going to be? And then in 2017, with the change of administration, Chairman Giancarlo asked me to focus just on FinTech and do kind of outreach, studying, reach out to the community, reach out to other regulators to kind of understand, what regulators could do to promote innovation, and in particular the CFTC, given its jurisdiction and various powers, what it should do. And so that was what led to the creation of LabCFTC. The purpose of that being to promote responsible innovation, to have a channel for innovators to engage directly with the regulator without needing to hire, armies of lawyers and regulatory affairs and compliance people, but to get feedback at an early stage that could help them understand what's expected of them. And so there were kind of two facets of it. One was to make it easier for innovators to talk to the regulator, to make it kind of less scary. And the second was for the regulator itself to start to explore some of these technologies. And since the time I left the agency in June to kind of work more directly with some of the kind of innovators in this space. But that work has been continuing. LabCFTC recently put out a primer a few weeks ago to help the market understand some of the risks of cryptocurrencies, but also how it fit into CFTC jurisdiction. So I'm planning to kind of cover just a couple of points, just having given my own background in terms of today's talk. One is just kind of the general regulatory landscape, kind of domestically and internationally, around regulation of these kind of cryptocurrencies and ICOs. That's obviously a very broad topic, but I'm just going to hit on at least kind of a few points I think are relevant and important. I also, think I'm going to spend a couple moments talking about the possibility of futures contracts that are derived from cryptocurrencies. I think it's just very relevant to the ICO community. I think, right now there's really a dearth of appropriate hedging tools. And, then I actually just going to kind of comment on actually the French put out an interesting paper, and fortunately it's in English, but it's kind of a window into, so I just thought I'd throw everybody a bit of a curveball, or however you say that in French. So, in terms of the regulatory picture for ICO, specifically in the U.S. today, it's still kind of very much evolving. The SEC, as the people in this room are well familiar, put out their report of investigation in July, which explained that they were going to take the framework that they've been applying to financial instruments for decades, and they took the Howey test. That it was a very well-established test. It's been applied in the context of condominiums and orange groves and all sorts of other things. They applied it. They identified the 4 factors. They ran through them, and they didn't punish anybody that time around. And the work they did was very thorough, right? They watched YouTube videos from the Slockit promoters. So I think they told the market that they're going to look very closely at all the information that's relevant. So I think people are on notice there, and they've since followed it up with warnings, about celebrity-promoted tokens, which I think are kind of fascinating. That they're, kind of who's promoting them, and what celebrity would really promote confidence. One podcast I listened to suggested that The Rock would be the most persuasive, or Tom Hanks. So we'll see if any of them are promoting ICOs, and if the latest SEC missive makes them concerned about potential liability. On the CFTC side, they've spoken out in this area. There's been something in the primer talked about how, it alluded to the cases that explicitly relate to CFTC jurisdiction, as I mentioned, over cryptocurrency as a commodity. There was an allusion to the fact that tokens could be a commodity as well. The newest, or one of the new commissioners, Commissioner Quintens, made a comment that he could see a world where some of these things start out as securities and end up as commodities. So I think that raised kind of, an interesting legal question. And, I hope that the CFTC will have more to say to continue to kind of guide the market in this area. This French consultation from the AMF, which is their market, one of the things that actually surprised me, but in a very positive way, is that there actually are a lot of documents that are written by government agencies that really do provide a window into their thinking. These consultations, and there's public feedback, and that's not just a pro forma exercise. I mean, I learned from the work of the CFTC that the staff, really reviews the comments and thinks about them, and it's a tool that helps the regulators, and this is true kind of all around the world. So this recent paper that came out literally last week from the French AMF it's sort of written, it's written from a very kind of French/European perspective, in that the definition of a security or a financial instrument, or even the definition of money, has some specific statutory elements under EU law and under French law. But what's kind of interesting is they lay out kind of three basic alternatives, and I think that these are sort of the range of things that regulators are thinking about today. So the French say, well, one alternative is, if we stick with the status quo and we just kind of don't do anything. And if we don't do anything, maintain the status quo, what that means to them is that because their jurisdiction is limited, very few ICOs would actually fall directly under their jurisdiction. Again, it has to do with, is it, it's kind of similar to the Howey test, but of course it's French and it's articulated by code. But one is, we do nothing, very few things in these areas would fall under their jurisdiction. But one of the points that they raise, and is one that I actually personally agree with, so you get when you get a former regulator to talk about these things. But I think that investors are attracted by legal certainty. I think that having clear regulatory status, having kind of clear lanes and clear processes, is going to attract greater resources to the space. And I mean, the amounts that have been raised thus far, $2 billion plus in ICOs this year, market cap of potentially over $200 billion, based on at least last weekend's valuations for Bitcoin. These are appreciations. It's very attention-getting. I think the ICOs have demonstrated, this really is an innovative and revolutionary new tool to fund, new ideas in a democratic way. But I think at the same time, the real money is still on the sidelines. When you think about, hedge funds, family offices, institutional investors, sovereign wealth funds, and all the other types of investors who invest in other assets, I think as this world becomes, full of greater legal certainty and clarity, and the infrastructure starts to resemble what they see in other assets, that I think that will attract more assets to this space. And I think, it feels like that's the kind of the common project and vision of a lot of the people in this room. And I think we're here kind of on the ground floor of making that happen. So the French said one alternative is we do nothing, and very little of it falls under our jurisdiction just because of the technicalities. And there are pros and cons. They want to hear about that, and whether people think it would be attractive if more fell under their jurisdiction, or if they stayed away. Because I think that regulators are balancing, on the one hand, promoting innovation, on the other, customer protection. But they don't want to stifle innovation. A second alternative that they identified was there's an EU-wide effort to make prospectuses more, to kind of simplify and streamline that process. It's actually very hard to do equity offerings in Europe, particularly across Europe, and kind of a big initiative of the European Commission right now is this kind of new perspective element. And so you'd sort of fine-tune the law so that you could offer ICOs in a prospectus framework. Now that kind of thing gets discussed in the US as well. And but that's a second alternative to kind of tweak something. And then the third is, do we just need a new special regulatory class for ICOs? And is it kind of an opt-in, or is it a mandatory framework? So that's the kind of, but I think that this paper from this particular group, I think regulators around the world are thinking about these exact kind of issues right now, and thinking what is the right way to go about it. And so they have to look at their own specific laws and definitions of what is a currency. In France, only the euro is money. Shares have to be issued by a corporation, whereas some of these ICOs, there's no legal personality to it. So there's technical issues that as lawyers you need to look at. But they're, I think, wrestling with these issues in an interesting way. The last thing I want to say, just a couple of words about, is talking about futures contracts. And will there be a futures contract in the U.S.? Will it come this year? Will it come next year? And what will it take? And I don't have the crystal ball. I can't say that I know what the regulators are thinking specifically about the applications they have before them. But here are the kinds of things that you would a regulator would be thinking about from kind of a CFTC perspective. So at a certain level, it's very easy to list a futures contract. If you have already an existing exchange that's licensed, a DCM in sort of CFTC parlance, then you can list a new contract. There's a self-certification process. It's very easy. You can do it in a matter of days. And in fact, new contracts are listed by existing exchanges all the time. What's unique about this circumstance, in my view, and I think one of the special challenges is, the trading organization needs to have a level of confidence in terms of contract design about the susceptibility of the futures contract to fraud and manipulation. And are there adequate safeguards? Now, one of the concerns expressed by the SEC when they turned down the ETF applications in the spring was the absence of market surveillance agreements. But I think it's from a kind of fraud and manipulation or kind of the market integrity perspective, Bitcoin, right now, I don't know if it's at 7,000 or 7,300, or maybe it dipped down, but it seems like, it could go up to 25,000 or it could go down to 300. There are arguments for both. And also, just given the opacity of trading around the world, it's hard to know who's driving the trading and what's taking place in it. And so the question is, can the operator of the exchange and then the regulator get comfortable that there are adequate safeguards against fraud and manipulation? And it's more complicated than just being able to come up with a numerical index. Now, in Japan, for example, they are directly regulating and overseeing the cryptocurrency exchanges themselves, and the more of that there is, I think that moves in that direction, but that's one area of complexity. The second area has to do with clearing. And futures contracts, once they're listed on an exchange, they have to be cleared in a clearinghouse. Now, clearinghouse is a risk mutualization structure where it has clearing members, it has a default fund, and so in order for a contract to be admitted, assuming it's a clearinghouse with clearing members who have put up initial margin and variation margin of themselves and their customers, you need to come up with some sort of risk and margin model. So, I think one of the big challenges in this area is how do you come up with a risk or margin model that is sufficiently robust and that you can have, the appropriate level of confidence in. I'm not saying that you can't do it, but it certainly strikes me as something very, very challenging, again, because of the volatility of it. But, other volatile futures products have been done before, but because I think also because of some of the underlying market structure that there's just a lot is not known about who is trading it and what's driving it. So I think that would be complicated. And so the clearinghouse, these clearinghouses have risk committees. The clearing members participate in these risk committees. And then assuming that the contract were, that there were kind of a catalyst to go forward, the clearing members, they would have to figure out, their margin would be at risk. Their contributions to the default fund. You say, well, what are you going to do with the contract? So are you going to put the futures contract in with all the others? So for example, a major exchange that has agricultural contracts, Eurodollar contracts, are you going to put this contract in with all those others, because then it potentially exposes, all the margin in those to risk? So, I think there are a lot of interesting questions and challenges ahead. I do think there would be demand for a futures contract as a hedging tool. And I think it'll be interesting to see what happens. So, thanks.
Jeff, thank you very much. We can have two questions quickly from Jeff. We have 2 minutes. Do you have any questions? Jeff's going to be, by the way, in another session in the later panel. But we take one question. Go ahead, 2 questions. Go ahead, sir.
The CME just announced that they're actually going to go forward. They're already launching the futures, the Bitcoin futures contract application. Any comment on that? I mean, I know that they're seeking approval very early, but for them, for the largest derivatives market to say, hey, we're committed to this, we're applying for this, I think it sends a huge message to the marketplace.
So yeah, that's a great question, and yeah, I mean, people believe that the CME announcement, right? They had been working on it. They had announced they weren't doing it, and then they recently announced that they were going to do it and seeking to do it before the end of the year. And people said that was one of the things that knocked the Bitcoin price up by 1,000. So I think that CME is in an interesting position, and I haven't seen kind of the materials or the how they're planning to deal with those margin risks, right? But so CME has kind of, the clearinghouse has 3 default funds. They have one for credit default swaps, which I believe they're in the process of closing, one for interest rate swaps, and then one for everything else. And so if they're going to clear the Bitcoin, unless they're going to create a completely separate risk pool and default fund, then and maybe that is their plan, but otherwise they would be putting their these Bitcoin contracts in the same pool with Eurodollar contracts and agricultural contracts and FX contracts and energy contracts. And so what that would mean is that if I'm a member of the CME or if I'm a customer of the CME, then I have a concern at least that these Bitcoin contracts, which may be highly volatile, and you say, well, is the margin sufficient? Is the risk model really sufficient? If it turns out to be inadequate, then they would have, if they were a default, they would have to draw on funds from that default fund. So, I think that that's the kind of question that, first of all, the risk committee of the clearinghouse would have to look at pretty carefully. I would expect my former colleagues at the CFTC, Division of Clearing and Risk, and the agency to look very carefully at the risk there. And there's an additional level, which is that because CME Clearing has been designated by the FSOC as systemically important, that if this were deemed to be a material change in its risk profile, then the Federal Reserve Board of Governors would potentially have the opportunity to review as well. So, I think it's the kind of thing that would be looked at closely, and I think a lot of people would be reviewing whether the risk and margin issues in particular could be adequately safeguarded.
Thank you very much. So we're running out of time. Jeff's going to be at the 5 o'clock session. It's going to be a panel. You can ask more questions. Thank you, sir.
Thank you.